You got me running, got me running. Shake it, shake it, shake it, feel that. Raise your hands up. Raise them up.
All right. Good morning, everybody. Welcome to the Forex Trading Asia Daily Currency Call. This is episode 318, and it's the 23rd of June, 11 a.m. GMT plus 8 here in Singapore. So, yeah, this is the currency call where you get market economic updates, key support resistance levels, trade ideas, and more. This currency call is going to be very beneficial to both the long-term investors and short-term traders. We'll be going through what could move prices, possible trade ideas, and also highlighting potential targets and risk. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. All right, straight off, we'll hit to the charts and we'll start off with the dollar index. So I'm going to get Scott here from Forex Briefcase Australia to share with us on the dollar index. Scott.
All right, thanks very much. And guys, welcome back as well. So, the trading session yesterday, we saw the US dollar break down a little bit. It did attempt to get through 92.06, and I did have an entry short on the Aussie dollar. Now, when I take positions before the US session, I'm always very tentative with sizing as well, because this can happen. And in the context of things let's go to the daily chart. We've seen a very significant run up, and it's just the natural flow of markets to see a pullback. And there was nothing really substantial to keep the US dollar elevated like we've seen above 92. So this is a situation where if we go down to the lower time frames, we've seen it consolidate back here before as well. We saw that last week. So what I'm going to wait on is we've got a little bit of news coming out. I'll just quickly share that as well. In regards to, we've actually got quite a little bit going on. So I'll just show the economic calendar thanks to Forex Trading Asia. So obviously we had Fed Chair Powell testifying, and really there was nothing there that was a standout. He actually lent towards inflation being under control after this transitory inflation issue is resolved. So that was the overwhelming theme I took from that. And then we've got FOMC member Bowman speaking. We've got a little bit of news out as well. Data-wise, we've got service PMIs as well later tonight at around 2200 GMT plus 8 is when things start getting a little interesting. We've got new home sales as well. We had existing home sales yesterday in the evening, and that was beating expectations by a little bit, but not beating the previous month though. So nothing again that was causing big spikes in the US dollar. For news I'm paying attention to, come Thursday, we've got initial jobless claims out. We've got GDP quarter on quarter as well. We've got core durable goods at 2030. So normally for US stuff, if you're in the GMT plus 8 time zone, it's around 8:30 in the evening. Most days is when significant news is starting to come out for the US. So I want to see if that's enough to push it a little bit high before, we go, and I'll just go quickly back to the chart for a break of 92.04. And, my stance right now is that I'm just going to be waiting to see, if we can just float around, and then I want to see a push and then a break and then a retest of 92. So I'm going to leave it for now. Really, the pairs to be monitoring looks like the euro and the pound seem to be offering a few more opportunities than the US-based ones. So those are my thoughts on the US dollar today, team.
Okay, thanks for that, Scott. All right, so as Scott mentioned, look at the euro and pound. So today is Wednesday. The currency in focus today is pound, and we did euro yesterday. So With that, I'm going to get Jin here, Jin Dao Tai, founder of LCMS Traders, multi-million-dollar trader, trading an account with more than $15 million on a daily basis. All right, Jin, pass it to you for the pound.
All right, thanks for that, Jinwei. So, I'll put this question to Scott and you can answer that later. Whether the dollar index, the way it's moving right now, do you think it is going to break? It's going to test 92, but do you think it's more likely to break 92 towards the upside, or is it going to test 92 again and then reject it back down, or reject 92 heading back down again? So I'll leave that question for you. You can answer that after my section. But looking at the pound dollar today, I'll show you the chart here. The pound dollar on the H4 time frame has been setting up quite nicely. Why I say that is because last week when we spoke about the pound dollar, I was anticipating it to test that 1.4150 level. Obviously it didn't, it broke straight down, broke several support levels, got supported at 1.3778 before now seeing that big retrace back up towards 1.3931, okay? So what could happen with the pound dollar at this point? Looking at the news here on Forex Trading Asia.com, the economic calendar here, okay? Today being Wednesday, looking at the news, we had spoken about the Euro PMI numbers. We do have the pound manufacturing PMI numbers, was 65.6. I think it will come out at about that 65.6 number, maybe just a 65. Services PMI was 62.9. I think that number will probably hold steady as well. Why I think it will probably hold steady is there hasn't been much changes in the UK. We've seen some opening up after COVID situation. We've seen a steady opening up. So I don't think much has changed at that point. So not a lot of changes here today for the pound dollar or for the pound news. But what I'll pay a lot of attention to is on Thursday, tomorrow, in the evening, 7 p.m. GMT plus 8 Singapore time, we do have the Bank of England, the BOE, the Bank of England interest rate decision. Most likely, we're going to see it hold at 0.1%, right? I think that the votes for an unchanged, for not changing, will also be a 9. So no one's going to talk about cutting rates. I don't think any member is going to be talking about cutting rates or increasing rates. But with that said, QE might change. I think they might not do a action right now, but they might talk about decreasing or cutting QE a little bit. So pay a bit more attention to the meeting minutes about future rates action, about the possible tapering of QE. So pay attention to that. I don't think there's going to be a change on Thursday, but there might be a signal of a change on Thursday. And then we spoke about the US GDP already. And on Friday, no power news. We do have some US consumer sentiment numbers looking to hold steady. So you can see not a lot of big news, not a lot of big changes approaching, but I like that kind of stability in terms of news. I like the lack of a surprise in terms of news. So what you can actually see here is that the pound dollar might actually be supported by this 1.3911 level. So what I anticipate to see is that it could come down, right? Test this support level. That's why I asked Scott about his view of the dollar index. If we do see the dollar test at 92 level, right, we're going to see that strength in the US dollar come down, test at 1.3911 level. But I anticipate that we might see it reject that 92 level and turn back down again. So with that stability in terms of the pound news, right? No big changes in terms of pound news. Some weakness coming around for the US dollar. we might see a buying opportunity. Look for a buying opportunity at about 1.3925, a very tight stop loss of about 25 pips, a good take profit at about 80 pips. You're looking at a way above 1:2, almost 1:3 risk reward ratio towards the upside for it to test that 1.4 resistance level. This 1.4 is going to be a crucial level. Good round number 1.4. If it does go up and test that level, we might actually see that rejection from that point or breaking through that, and then we can see for the next trade coming up. But first off, I think that the likely move is towards 1.4. I would like it to test that support before bouncing back up, or it could move slowly and steadily up towards 1.4. Okay, so with that view, with my view on the pound dollar, what this means on the euro pound, when I spoke about it yesterday, I said that it was likely to go up and test that 85.80 level. I still hope that we could see it go up and test the 85.80 level. But as the pound dollar climbs up, if it does climb up significantly, then we could see that rejection of that resistance level. With that rejection of that resistance level, I'll be looking for selling opportunities at about 85.70, very tight stop loss of less than 20 pips, a good take profit level of 40 pips. You're looking at a 1:2 risk reward ratio towards the downside. But this is all dependent on it moving up, testing the 85.80 level and rejecting before looking for that selling opportunity.
Okay, thanks for that, Jin. Yeah, Scott, pass it to you to let's check out whether the DXY will actually break the resistance.
Look, it's a good question, and I was thinking about it, and I think really the key thing now that we'll be looking for is the next economic projection release in September by the FOMC. So that's later down the track in September, I believe. So because they don't release it at every single stage. So that's not an immediate answer. But what I see is that it's probably going to keep retesting and just holding steady, because there's obviously not going to be anything that's going to really cool down the inflation situation, but the market seems to have priced in the situation that it seems that Jerome Powell has mentioned so many times about transitory, and it just seems that the market is now somewhat believing it. Now, I would say, why is that? I mean, have a look at the NASDAQ. I actually liquidated quite a few positions. So I have a strong bias that I need to pay attention to this, because if I send the US dollars back to Australian dollars, it's in my interest to do that when the Aussie dollar is weaker. So I would say that if people are listening to this, why does Forex matter? It matters for multiple reasons. So I would say if you're in a situation where I'm actually hedged against the Aussie dollar, I would say that there's not a case to say it's going to really, really strengthen dramatically. And I think it's going to hold steady. And what I would say is that means that the pound and euro are definitely in a nice position to rally with that. I mean, the Aussie dollar it's very conflicted. You've got iron ore still up quite a lot though. So to me, it's a real situation of just being patient if you're in my situation. But against the euro and the pound, really, it's, you've got to be bullish with that now. Until the next economic projections, we'll just see it. I don't see it. It won't go to 93. So it might fake out a little bit, but it's, yeah. Is that an answer? I've sort of been on the fence a little bit though, haven't I?
Yeah, I think, yeah. It's, generally, we have the idea that it's not going to really break unless there's some major difference in the FOMC coming up. Yep. So I think, yeah, that pretty much answers the question. So before we move on to the next part, just a disclaimer again: any information shared during this session is not a trade recommendation. It's the opinion and views of the speakers here. So remember to do your own analysis prior to entering any trades. All right. So if you guys are looking for a platform, to earn gradual capital appreciation or passive income, even an alternative investment channel, that provides a more competitive returns than what you get from a typical unit trust. Listen to what Scott has to share about Forex Briefcase. Scott.
All right. So guys, what I'll do, I'll just go through just a few slides here explaining what Forex Briefcase is. So I am the account manager for Australia for Forex Briefcase, and I've been in this role since the start of this year. I'm an investor as well, and I think it's definitely worth just paying attention to these next few slides. Firstly, what I'll be talking about here is the verified track record. So inception was September 2018, and as you can see, it's quite a smooth equity curve. This year especially has been particularly pleasing with 6 months in a row of positive returns too. And when you put that into the context of how other asset classes have behaved, it's a nice way to let your money work for you, with the emphasis being on capital protection as well. So you're not seeing big swings in your equity. You're seeing a focus on taking advantage of moves that are very difficult for a normal investor or trader to do so because of the particular focus you've got to have on economic news. And what we can see here is that there's a lot of opportunities in the Forex markets when you allow a professional team to take advantage of that as well. And as you can see, it's been really nice. You've got obviously in 2018, there was a really solid return in 4 months. 2019 was fantastic. Even last year in 2020 with COVID and everything that was going on. And now I'll just ask you to pay attention to 2021 here. And the back end of this year is going to be quite turbulent. We've seen in equity markets that there's a lot of shifting. We've seen money going back into tech. It's very uncertain. Then you've got that inflation issue as well, where it just means that if you've got money sitting in a bank account and you're frustrated with term deposit returns, you really can see that, even though Forex markets and things fluctuate in a volatile nature, if you have someone that knows what they're doing, you really can take advantage of that and be protected on the downside as well, which is, you can nearly have your cake and eat it too, honestly, which is, really fantastic. Now, just a brief little diagram here going through what Forex Briefcase does. So it's a managed account service specializing in Forex trading. The max drawdown, which is the losing month, the worst losing month was 2.24%. So that's something to really focus on, because no one really thinks about losing money. And that's the number one thing that you've got to consider. And the focus with Forex Briefcase is gradual capital appreciation. And they think about taking advantage of high probability setups. And that shows with the 87.5% profitable months as well. Average return of 3% per month as well. We're over 95% up in, I think it's around 36 months or so, or 35 months. And then we've got 800 clients, or over 800 clients globally, and 15 million under management as well. So I thought that really summarized things pretty nicely. I'll just go to the next slide. So gradual capital appreciation is captured here in this diagram. I can't take credit for this. This was Daniel's work. I really think it just especially captures the importance of the start of 2020, when we saw a lot of people being liquidated, selling out of positions, being very frustrated. And, the money can be working for you even in very uncertain times as well. And this captures it really nicely. Again, we're close to 96% now with the end of the June calendar month for us as well. And it's just, really small pullbacks where, markets aren't offering much, but you still have that money protected as well. And you don't have to deal with, like we've seen in cryptocurrency, it's really fantastic when things are running. And a lot of people were telling me how much money they'd made in Dogecoin. And I really emphasized that please take profits, like don't hold. And had a friend who $7 grand in the money, and now he's asking me to join Forex Briefcase because it feels terrible to lose a lot of money, trust me. And I was following these guys all through 2019. Then I finally decided to get invested in August 2020. And it was a fantastic choice because, it's nice to have the money in a diversified way working for you instead of all in stocks or any one particular asset. Now, how to invest? The best way would be to visit forexbriefcase.com or email me at scottandrews@forexbriefcase.com. I do have a YouTube channel as well showing completely transparent results of the performance of the account as well. Currently, I've got around 61,000 USD invested with Forex Briefcase as well. That's grown since August, which was 51,000, which was the initial investment. So feel free to check the account out. I've got some news features as well, and the 100K challenge as well, which you can follow, and I update pretty regularly, about a couple of times a month as well. So that is Forex Briefcase, guys. Something strongly to consider in these uncertain times.
All right, thanks for that, Scott. I think you pretty much had all the questions answered by some of the readers, but I do have a question from a reader, a common question from a reader here, that how does Forex trading kind of mitigate the kind of scary drawdown that we see in cryptos and, even stocks? Like COVID hit last year, a lot of stocks had a drawdown of 20, 30, or even 50%. How is Forex trading different that, it can mitigate that kind of loss?
So essentially what happens is that let's say you buy a speculative stock in artificial intelligence, you've got to have the whole amount there present to be, enjoying any sort of gains. Now, the thing with the Forex account is that the risk management will be deployed where only a very small amount of the account is risked, which is something that if you're a professional trader, you understand, and that's what this is offered. So instead of risking the whole account on one particular idea, where then you're vulnerable to, let's say, for example, I'm in the Australian stock market, you'll have things where you've got electric vehicle stuff. They lose a contract, the stock can literally fall 60% in a night. And I've got friends that have been following my progress, and you've got to understand that the stock market is extremely volatile. And if you don't really know what you're doing, it doesn't matter that it's listed on an exchange. Things can happen out of your control. But if you've got your money under management, your money's sitting there ready to be deployed. But if it's not a setup, they'll just have it there ready. So you don't have the whole capital at risk at all. Normally it's, 0.5% to 1% at risk at one time. And then if it goes against you, it's cut immediately. So your downside is very limited compared to, other asset classes.
All right, thanks for that, Scott. Okay, so guys, I've pasted the link in the chat, forexbriefcase.com, to check it out if you're interested to set up an account. Okay, we have come to the end of the session today. We will see you guys tomorrow for the Yen and Gold session. Thank you so much. Goodbye.